Hello, good evening everyone, and thank you for having me here in Wagga. And before I say anything, please excuse me if I do say any of the suburb names or any of the street names incorrectly. I have been given a crash course on how to say some of the suburb names and some of the street names as well, but if I do say anything incorrectly, please excuse me. I am Brisbaneite after all. Now, what I'm going to do today, I know that we've had a couple of presentations, and I know myself that after I've sat through about an hour or so of presentations, I start to go a bit like this. And I start to sort of go, okay, what are the key things that this person is going to tell me so that I do stick around and I do actually listen to her, right? So what I'm going to do is I'm going to give you a bit of an update on what is happening nationally, so that you have a bit of an idea of where the whole Australian property market is going, what's been happening, and what we are expecting for the rest of 2019 and in early 2020. And then once I've done that, and I promise I will be very brief because I know that you're probably more interested in the local Wagga market or maybe even the Riverina area, that is what I will be talking about, which is exactly there up on the screen. So all the trends when it comes to house, unit and land, some of the top performing suburbs in Wagga, the rental market and investment analysis. And for those of you who are thinking about investment properties, you will want to know this. And what are some of the key projects and how much money the government is actually investing into Wagga, the local government area. So not just Wagga the suburb, but the whole of Wagga Council. So nationally, this is what we do at PRD. So I'm not always going to be on the lectern, just to give everyone a heads up. I'm one of those people who likes to sort of work around the stage. So hopefully everyone can still hear me. So this is what we do at PRD. PRD stands for Property Research and Development. And I did my PhD in property economics, which is why I am the chief economist at PRD. What we do for every single suburb and every single council across Australia is that we monitor what's been happening in the sales and what's been happening in the median price. And what we do on a year and a half year basis is we look at the number of sales going down, or is it going up? What about price? Is it going down? Is it going up? Or is it staying stable? So we do this for every suburb across Australia. And when you do that for every suburb across Australia, you start to get a feel of this is what is actually happening on the ground on the Australian property market. So in the first half of 2018, about 49% of the arrows were going up. 42% were going down. In the second half of 2018, which means that's June to December 2018, we started to see a very dramatic change in trend. Only 36% of the arrows were going up and 56% of the arrows were actually going down. In the first half of 2019, so the first half of this year, so up to June 2019, again, higher percentage of down arrows. 34% were going up and about 62% were going down. Now that provides us, and again, we do this for every suburb across the country, so that provides us with a really, really good feel of what's happening on the ground when there's a lot more arrows going down. That means the number of sales are going down, the unit prices, the house prices, the rental prices are going down. And when we see that, it does give us an overall feel that the market across the country is slowing down a little bit. Now, this is again something else that we do, is that we create a property clock for every state across the country. And it's telling us pretty much the exact same thing as this previous one, where there's 62% of the arrows going down, is that a lot of the capital markets and the metropolitan markets, so that's your Sydney's, your Brisbane, Melbourne, etc., they're all on the downswing part of the property clock. That means that they've had their peak, they've had their going up in terms of property price, and they're starting to come down. So capital city and metropolitan markets actually went down by that much, 0.3% and 6% over the past 12 months to the first half of this year. Regional markets, which is places like Wagga, Tamworth, etc., in total have actually remained resilient, recording a growth of 1.7%. What this shows us is that if you are in a regional market, if you are planning on investing in a regional market, you're actually much safer than when you are planning on investing in capital cities and metropolitan markets. That's an awesome thing, because this is where you guys are at. And therefore, if you are planning on buying a home, whether it's as an owner-occupier or as an investor, it means that over the years, your capital growth will be less volatile than capital city and metropolitan markets. A lot of people ask me this all the time. Asti, are properties becoming more affordable? Can we now actually afford more than before? And the answer is that for those of you living in New South Wales, which is exactly where you are, it is. Statistics and data shows that affordability in New South Wales have increased by 0.6%. Where's New South Wales? This is the pink line here, so you've actually gone up a bit. And across Australia, it's also gone up. So what that means is that there is now higher affordability, more properties on the market, and also at a cheaper price. Now, in terms of the Wagga Wagga market itself, and I love talking about Wagga Wagga. Reason being is when I do this presentation across the country, and whenever I do it in Sydney, in Brisbane, in Melbourne, this graph, I'm not reporting a positive growth. I'm normally reporting a minus growth. This is my life for the past 3 months, is reporting minus growth in a lot of markets. Whereas in Wagga Wagga, there has been an increase in growth. 5-year price change, 18%. That's your capital growth over the past 5 years if you have owned a house, and 33.5% over the past 10 years. That is an amazing amount, because when I talk in other markets, I normally see less than 30%, whereas in Wagga, I'm seeing more than 30%. Top performing suburbs in Wagga Wagga. Now, there are a lot of other suburbs that I can talk about, but the reason why we've chosen these 3 top suburbs is because of 2 reasons. 1, price growth, and 2, we wanted to make sure that there are projects in this area that will sustain that level of growth. So Wagga Wagga, obviously. Someone help me out? Just Gobba, right. Okay, just Gobba. And I'm going to have a crack at this one. Is it Kooringal? Yes? Okay, so again, we've chosen these 3 suburbs and we ran the data for every single suburb within the local government area, so within the Wagga Wagga Council. And these 3 suburbs are the one that does have the amazing price growth, but at the same time also have quite a few projects, a few developments going into the area. You might see a lot of other research or a lot of other articles, etc., that only talks to you about a low price or a high price or double-digit price growth. But they don't check whether there's any projects or any development going into the area. If there are no developments going to the area, there is nothing to sustain the level of price growth in that particular area. And that's why we always check projects. So in terms of unit price, if any of you are thinking about buying in units, price change of 4.1%, so that is your capital growth over the past 12 months. And trust me, Sydney is not seeing this at the moment. About 11% growth over the past 10 years, which is also again quite good. Now the data for units is a little bit more volatile, only because the Wagga market is more of a house and land market as opposed to a unit market. And you'll see this in the land pricing, 6.3% growth over the past 12 months, and 32% growth over the past 10 years in terms of capital growth if you are investing or buying into land. So these are some amazing figures. For those of you who are investors or who are thinking of buying their first investment property and is wondering what's the rental market doing in Wagga Wagga Local Council. Well, good news. Rental prices have grown by about 2.2% over the past 12 months for houses, and it's stayed stable over the past 12 months for units. The way that you read this, there's an increase in the rent price for houses and stable for unit prices or unit rent prices. But the number of house rentals and unit rentals have all, where's the ready thing? Have all gone down, all right? So when there are, normally the reason why the price goes up, if there is less amount of rentals in the area, it means that there's actually room for investors to go into the area because there is demand for it. The reason why this price has gone up is because there's not enough supply. And so that means if you are thinking about investing and you're thinking, oh, is it a good time for me to invest? Is my property going to be rented? Am I going to get the return for the property that I'm about to buy and invest in? This data shows you that at the moment in the Wagga market, there is room for more investment, for more house rentals, for more unit rentals. Okay. So which are the top performing suburbs for rentals in terms of annual rental price growth? First one is Turvey Park, Jasgoba, and Forest Hill. I actually had someone train me how to say that because there's a similar suburb in Bendigo and they say Tarvey, even though the spelling is like that, so I actually had to check how this one was said. But again, this is based on annual rental price growth, so there's quite a healthy percentage in terms of rental growth, and we also ensure that there's projects going into the area. Because even though there is rental price growth, if there are no projects going into the area, then it's not going to attract more people to actually rent in that suburb. So if you're wondering, should I buy a 2-bedroom house, a 3-bedroom house, a 4-bedroom house? Which one's going to give me the most rent, or which one's going to give me a higher percentage growth in rental? The answer here is that median house rental price is about that much, and 4-bedroom houses provided the strongest median rental price growth. So if you have a 3-bedroom house, your rental price growth is about 1.5%, but if you have a 4-bedroom house, your rental growth is about 2.4% over the past 12 months. So you're definitely getting more bang for buck, so to speak. Now, I love this graph because as an investor, you want to know, will my property be rented quickly? Vacancy rates tell you just that. The closer you are to zero, the quicker or the higher chance that your property will be rented. Okay, so the quicker, or so the lower that you are, so the most close you are to zero, your property will be, there's a better chance of your property to be rented. So Wagga Wagga is the red line, which is here, about 1 point something. And you can see that the vacancy rates have gone down dramatically. So in vacancy rates, you want to see two things. You want to see as close to zero as possible and a declining rate. Because if it's going up like this one, it means that there's more vacant properties on the market. And that means that the chances of your properties to be rented is smaller. So you want places that goes down like that. So that's where Wagga is. In comparison to Sydney, Sydney is actually going up, which is not what you want. And Sydney is much higher here at 3.5% compared to Wagga. So if you're an investor, Wagga makes more sense. Lower vacancy rate, and it's going down compared to Sydney. From a rental yield perspective, now rental yield tells you if you're about to invest, is it worth going in? Are you going to get the return from your rental property? Wagga is the red line, which is up here. So it's sitting at about 4.9%. And look at where Sydney is, all the way down here at 2.9%. So Wagga Wagga definitely makes more sense than Canberra or Sydney Metro. So what's actually going into Wagga? What sort of projects? How much is the government spending? All of that sort of stuff. In 2019, total project development spending about $256 million are about to come into or plan to be commenced in Wagga Wagga. That is going to be around the same in 2020, $252 million, which is an amazing amount, especially when you're considering in the past, it's sometimes almost nothing or sometimes very little. And 2019 and 2020 is pretty much the boom of project development, whether it's commercial, so that's your shops, your offices, things like that, industrial, your warehouses, infrastructure, so that's your roads, your bridge, your hospital, your schools, mixed use, so that's when you see apartments at the top and shops or offices down the bottom, and residential, so that's your houses, your units, new land, things like that. 2019, 2020 is basically the year of development for Wagga Wagga Council. So there's a lot of stuff happening. If we compare between 2019, 2020, in 2019, it's mostly commercial development, so your offices, your shops, big shopping centers, medical centers, things like that, aged care as well. In 2020, there's more of a focus on infrastructure, so that's your roads, your bridge, your housing, social housing, sorry, your hospital, your schools, things like that. So this is actually, these two combination, that is what brings growth into the area, because it makes the area better. There's more commercial activity, more local jobs, better livability. People are more attracted to the area. So if you think about it from the perspective of the vacancy rates is already low, it's going down, rental yield is higher than Sydney Metro, there's a lot of development coming into the area that is commercial and infrastructure focused that will bring in more business, that will increase local employment in the area. I put my money on Wagga. Right? So what are some of the key projects? I won't go through every single one of them because that will just bore you. But feel free to have a look, and I know that, and please, I might be wrong with this, but guys at PRD Wagga, you will send this out to everyone that is here, I'm assuming? Yes? I'm getting nods, good. So if anybody do want to have a look at these projects, feel free to do so. There's an aged care facility. There's quite a lot of mixed-use development. Most of it, like you see here, are commercial development, which again will bring more business and increase local employment. Some of the key residential projects that's about to happen in Wagga, some of them actually, it's quite funny that 3 of them are in Wagga and 3 of them are in just Goba. Yes, just Goba. That's the one. Those are the top key ones right there. And I'm sure that as locals, you would know exactly where these things are more than me in terms of which streets and things like that. But these are some of the key residential projects to watch out for. Okay. And just to map it out, that's where those key residential projects are about to happen. So if you are thinking of buying, if you want to know where the new houses, the new townhouses, the new units are going to happen, this is where they are roughly, if I map it out. So just to wrap up, when it comes to, and I've said this all the time when I'm at first home buyer seminars, if you're thinking about buying a house, whether it's for investment, if for investment, make sure you check what's happening in the vacancy rates. Make sure you check what's happening in terms of rental yield. Most importantly, whether you're about to buy for yourself, and of course when it's yourself, then your own financial situation comes into play, but you want to also make sure that there's that capital growth. Whether if you're buying for yourself or whether you're an investor, and this is something that not a lot of people will tell you and not a lot of research houses will give you, the amount of projects going into that area. Make sure that you do your research not only on what is the median price, so what is the average price of the area, what is the growth, what is the rent, has rent gone up, all of that sort of stuff. Because these things are quite fleeting. It's kind of like this is what's happening now. What you want to ensure is what is going to happen in the next 5 and 10 years in terms of projects, in terms of development in that area that will sustain this capital growth that you're seeing right now, that will sustain the vacancy rates or the low vacancy rates and high rental yield that you're seeing right now in this area. Okay. And that's it from me. Thank you very much. Oh wait, I've got one of these tickets.
Have you?